Good morning, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the morning call. Good to be back in front of you. Hope everyone had a Merry Christmas, everyone who celebrates, and everyone has a Happy New Year. I will be gone starting, this is my last day, so you won't hear from me, and Scott will be back after the New Year as well. So some different faces maybe in front of the camera here for the next few days to get you some new voices and stuff like that. But overall, the market, I'll make it quick because we're headed near the open right now. The market futures were lower overnight slightly, but Santa's still around, I guess, dragged us back positive. We're slightly higher this morning in U.S. markets, and Asian markets continued higher. Asia led the way. The Shanghai finished up about 1.3%, and European markets have healthy gains as well, up almost near 1%. I think the French market was up over 1%, and the other ones maybe 0.8, 0.9%. Anyways, we take a look at the chart of the spiders, which is what we care about. As you can see, really impressive Santa Claus type rally on Christmas Eve. And then yesterday, it was an interesting stat, Bespoke, which is a great blog, does a lot of quantitative research, and they compiled research that showed that December 26th, or at least the trading session after Christmas, is the strongest day traditionally, or historically in the market. And that held true yesterday with a big gap and go to the upside. It was a nice extension if you were just sitting long, but at this point, it's a little bit hard to buy. I think the Santa Claus rally could continue through the start of next year, which is today's session and then Monday and Tuesday. But overall, I think stocks are getting a little bit extended, and we're seeing some evidence of that this morning. We're seeing some evidence that some can continue and some are pulling back. But the big story in the market has been a group of momentum stocks headlined by the 3D printers and the social media stocks. And we'll go ahead and jump into those. The 3D printers are suffering a very positive fate this morning, while social media is getting a little bit of a pullback. But first we'll look at 3D printing. Triple D is a leader in the group. Looked like it was going to have a little bit of a pullback. Christmas Eve, it showed a lot of relative weakness after some downgrades back into the 8-day moving average, but then yesterday, right back to the upside with a big gap and go to make new highs. And then the group is all gapping up this morning. Triple D is up almost 2%. ONVO. It's a more speculative name in the group, not one that I would necessarily buy and hold. A company that's trying to print 3D human tissue, and they came out last night or this morning and said that by 2014 they are saying that they are going to have printed a human liver. And that doesn't mean they're going to print a human liver that's going to be used in a human body. It just means that they're going to print, using their technology, a liver that can be used for drug testing purposes, which is basically what they're trying to do. The idea of printing human tissue that could be used for transplants and things like that, that's way far in the future, but what they're trying to do is print human tissue that can be used for drug testing in order to bring the costs down for drug companies to test their drugs and stuff like that. So that's what they're trying to do. They don't make any money. All their whole existence is based on grants and things like that, which I guess you could say is not that dissimilar from something like Tesla was for a while, but it's up around 3% so far this morning. A small, like I said, more speculative type name. Could get some interest just based on that speculation. But and then you take a look at the chart of VJet, also up, participating in this pre-market 3D printing party. Will be up above this pivot this morning, so it could be another one that squeezes after that big move down on that bearish report from Citron that led to that big sell-off that hasn't really been recovered by VJet. And like I said, the social media stocks are suffering a little bit of a different fate this morning. Twitter has been the story of the market in December, rallied up more than 75%. It just continues to go higher. That small float in the IPO is what's really driving the price action. We can go ahead and take a look at the chart. Yesterday, I think a lot of people have been looking for short opportunities in this for a while now, but yesterday was one where, just following on Twitter and those types of things, you could see that a lot of people were looking to short this stock. And early, you actually got a nice move down. And so what you got was people who were not greedy and took that trade quickly could have gotten a nice down move after the gap up. But anyone who was greedy and was looking for that bigger short in Twitter got punished as it rallied back and finished with almost 5% more gains. So it continues to go parabolic, but this morning it got a big downgrade and is down more than 3% pre-market today. We can take a look at the 5-minute chart to see exactly where it is. It continues lower also, below 70 now for Twitter. We go back to the daily chart to see where that is. So yesterday's low is going to be the big area to watch to see whether we can hold. Yesterday's low was 69.13, so if we break below yesterday's low, I think we could get some more momentum to the downside. This move has obviously been absolutely huge. The valuation of the company is now more than $40 billion, despite the fact that they don't make any money and revenues are still pretty scant. But overall, valuation is not a timing tool, and you don't short on valuation. And as Scott often says, the most successful companies are ones that grow into their valuation. And social media obviously has the possibility to transform the internet, transform the way we live our lives. So I think people just want exposure to one of the leading social media platforms in Twitter. And who knows, besides the short float, why this big run-up has occurred. But it's a little bit hard to buy up here, I think. And I think we're seeing some evidence of that this morning. And we could get a little bit of a pullback in Twitter. And Facebook has been overshadowed by Twitter, despite the fact that Facebook has been extremely impressive. Since it was announced that it would be added to the S&P 500 and 100, you've seen this really impressive move to new highs. We take a look. It broke above that pivot. On Christmas Eve, didn't have as much power as some other stocks did. And then yesterday, a slight pullback of around 0.4%. It's down this morning as well, not nearly as much as Twitter is, down about 0.5%, I believe, on Facebook. It's rallying a little bit while Twitter's continuing to weaken. But in general, these social media stocks are ones that could use a pullback, could use a little bit of a rest. They're extended from short-term moving averages, and I definitely wouldn't get greedy on a day like today, a Friday after Christmas, leading up to the new year, after a big run in the short term and a big run this year. I don't think today's a day to get greedy or get over-aggressive. I think you look for maybe some short-term intraday rental-type setups, and that should be your focus. But you take a look at the banks. My favorite setup in the banks right now, I think, is Bank of America. I know Scott's long in the VTF. You can see a tight pattern here. You get that big igniting bar on the taper news, big red dog reversal. And then since then, you've just seen some really nice sideways consolidation. I think some people would have liked to have seen that type of action in the social media stocks to give them more calculated entry, but we're getting that in the banks. A little bit slower trade than some of the momentum stocks that we've been focusing on, but if it can break above this little triangle pattern here, I think Bank of America could get some momentum. And just to go over a few names from off the charts, last night we took Groupon off the watch list after some really impressive action. What we decided was last night, after 7 consecutive days up, a really nice percentage move from when we listed it on off the charts. It's extended from its 8-day. Made a high of around 12.19 yesterday. Our target zone was 12.30. We decided, you know what, let's just take our profits on this idea and move on, but could continue higher, but a little bit extended in the short term. And then you look at a stock like GE. It's one that Scott's been long on the VTF as well. The last 2 days broke above that 27.50 pivot that we've been talking about, and some really nice gains for a dinosaur, or whatever you want to call it. So we'll see if that can continue higher. And then XOM, you talk about moving big stocks. XOM, one of the biggest, maybe the biggest market cap stock in the market. Really impressive gains, 1.7% gain or something like that yesterday. For a behemoth like that to move like this is really impressive, and so this is heading towards our targets from off the charts as well. So impressive action there, exactly what we like to see. Anyways, I'll wrap it up. As like I said, we're getting near the open, but like I said, overall today, big move this week on the Santa Claus rally type stuff. Big move this year, obviously. I think today is a day to start planning ahead for 2014, take some profits from the recent action that we've seen, and maybe focus on those big momentum sectors, the 3D printers, maybe some social media, if you want to do some short-term type trading. But overall, I don't think today is going to be as good of a trading session as we've seen the last 2 days. So my advice would be to take it easy. We have another video coming out today from this interview that I did with Scott previewing his 2014 outlook. This one's about the difference between making predictions and building a plan. And one thing Scott is very specific about when talking about his 2014 outlook and his previous outlooks is that nobody's going to be exactly right with their predictions or their outlooks or whatever. He comes out with the 2014 outlook, and I help him with it as a roadmap. You know, the price targets aren't always going to be exact. The action is not always going to play out the way we say, but it's good to have a macro plan. But overall, what you need to do is create a set of if-then statements. Create not something that you're just going to buy blindly and sit in these stocks, but you're going to have a plan, you're going to have a process, and that's what he talks about in this video segment that's coming out today, is how he maneuvers the market. And you can use things like our Off the Charts newsletter, the price point sheet, and then in the VTF in real time, you can see how during the year we maneuver certain positions and things like that and identify trends. But that video just touches on that a little bit. We have all the other segments, if you haven't watched them already, from that interview, which I think was a really valuable tool for revealing some of Scott's methods and things like that. And Scott's 2014 outlook will be out within a week. So if you haven't jumped on that bandwagon, I would definitely recommend it. I think it's going to be a valuable tool going forward in 2014, which could be a very interesting year in the market. But this has been John Darsie, Editor-in-Chief, here for the Morning Call. See you back here for the Daily Recap.